Post-FTX meltdown, regulation-abiding companies can restore trust. Adhering to stringent guidelines is less flashy, but will ensure safety and reduce risk. By Christopher Robbins. Layer 2 Nov 17, 2022 at 1:45 p.m. UKB. Christopher Robbins. Layer 2 Nov 17, 2022 at 1:45 p.m. UKB. Just a few weeks ago, it seemed like the crypto universe had found a new sense of calm and stability. Leave it to CoinDesk's journalists to pop that illusory bubble in dramatic fashion. We are now around 2 weeks out from the report that took down FTX, strongly suggesting that its financial foundation was built on a shell game it played with sister firm Alameda Research using its FTT token. That news touched off a series of events that led to FTX's bankruptcy at the end of last week. This week, other companies are starting to fall, and it may take a long time for them to stop falling. As we have documented in recent years, Sam Bankman-Fried and FTX were among the most prolific investors in crypto companies on the planet. Beyond Bankman-Fried's status as a rescuer of fallen crypto companies like Voyager Digital, he also was an active venture capital and private equity investor. You're reading Crypto for Advisors, a weekly look at digital assets and the future of finance for financial advisors. Subscribe here to receive the mailing every Thursday. Consolidation coming now. All of those investments are coming unwound. Just this week, after news that the FTX rescue of Voyager has been rendered void, Genesis has stopped withdrawals. After halting withdrawals last week, follow the URL for the full article. For more on this story, visit the news article link.